Happy Saturday. This is Alan Gassman here in the Gassman Studios in Burbank, California. I'm here with Brandon Ketron. Brandon and I used to be estate planning and tax lawyers. Now we're just PPP lawyers in Clearwater, Florida. And we're here with the smartest man in the universe, Kevin Cameron, CPA. Kevin lives and breathes PPP and comes up for air every once in a while and works on EIDL. Kevin's in a bad mood today. He missed the swim lesson with his granddaughter because of bad weather. So Brandon and I will just try to keep up the spirit here, the positivity, the good news and the not so good news relating to the new PPP FAQs. We did a 90-minute version of this talk just this week for the Limeberg system. It's not so free, but if you want more information, send us an email, put LISI, or go to their website and you can buy this from them. We have an upcoming free webinar on estate tax planning. We call it the Biden two-step. If you're interested in that, just email me, put in the RE line, Biden two-step, and we'll get you involved. That's with Jerry Hesh and Marty Shankman. I promised Jerry Hesh, for those of you who are estate planners, please register for the Notre Dame Tax Institute. It's a fantastic program, lots of information here for you. Kevin has done a really nice job on a video summary of his amazing PPP spreadsheet. Fortunately, not as many people need the spreadsheet as before, but CPAs sure need the spreadsheet. So watch the video. It's better than most of the reruns that you probably have been watching. Your color guide for today, we have new regulations from the SBA known as FAQs. They are in blue because they give us the blues because they're not all borrower friendly. The red alert, when you see red, it is the Rubio Collins bill, which is very borrower friendly, and we expect that it will be passed. I don't think it'll be changed at all. Then brown is the EIDL program, the emergency loan program, and there's a lot of people who are going to step in poop, and that's why when you see brown, you think EIDL. And then green is the original statutory language from the CARES Act itself. Now, pages 12, 13, and 14, we go through the basics of the EIDL program and the basics of the PPP program. You can read this over yourself. I think everyone on the webinar knows that EIDL grants, not loans, but grants were given up to $10,000. If you got the grant, you don't have to pay it back, except to the extent you got PPP money equal or exceeding the grant. If you did, then you have to pay that amount of the PPP loan back, even if you would have gotten full forgiveness. Otherwise, if you were fortunate enough to get an EIDL loan, and a lot of people are getting them, the first thing to consider is whether to give it back. And we're going to talk about why you may step in brown stuff if you got an EIDL loan. Those come directly from the SBA. The PPP loans come from your bank. It was based on 2.5 times your average monthly payroll from 2019. Now there's some exceptions in the Rubio Act that would get you a loan even if you weren't necessarily opened in 2019. Your application deadline was August 8th, but you may get a second bite under the Rubio bill if you had a substantial downturn in your revenues. You can use these loans for business expenses, but not personal expenses. And if you spend them on certain amounts, the PPP amount loan on certain amounts, you can get forgiveness up to full forgiveness. Brandon, Kevin, anything I've missed as far as getting us through these key pages? One thing I know I missed is the EIDL loan, if you get it, is payable over 30 years amortized, which is just a really, really generous program. I don't think they had to do that. Anything I missed?
And on that EIDL loan, Alan, they don't even have to make payments for the first 12 months.
Wow, beautiful. That way they can afford legal and accounting fees. That's great. Okay, Brandon, do you want to take us through the primary FAQ points, 815?
Yeah, so what we tried to do here is just do a quick slide pointing out some of the most important points of the August 4th FAQs. So number one, they are going to allow us to use e-signature, scanned copies, e-consents. You don't have to go to your bank and sign those forms. Mostly this is just all related to the coronavirus, making sure everyone stays safe and not having to actually travel to get wet signatures on documents. Number two, the interest is only on the portion of the loan that is not going to be forgiven. So interest is accruing from the date that you received your loan, but if you get everything forgiven, then you don't have to worry about paying that accrued interest. It's only on the portion that is not going to be forgiven. And then the final point of number two is that payments aren't even required until the SBA gives the bank that you got the money for a decision on loan forgiveness and actually pays them back for forgiving the loan. So that could be a lot longer period of time than a lot of people were first expecting, that you get payments deferred if you do have a little bit of PPP loan still left over after forgiveness. Number three, all of the cash compensation limitations, the $100,000 limitation applies on an annualized basis. So for the owners, that's actually going to be limited to just $20,833, as we'll talk about. But for your non-employee owners, $46,154 if you go the full 24 weeks. We think if you're somewhere in between that 8 and 24 weeks, you're going to have a smaller amount that applies as a limitation. The number of weeks that you have for your covered period, annualized to $100,000, is going to be your limitation. Number four, for healthcare and retirement plan expenses, you cannot get forgiveness for benefits or expenses accelerated from periods outside of the covered period. So what exactly does that mean? Well, we think it means that you can't prepay any of these expenses that were going to be incurred after the end of your covered period. So for example, if you have a 2020 pension expense, you could probably go ahead and pay what's accrued up through 2020 and pay that liability, but for the amounts that are going to be incurred after 2020, you can't prepay those in to the plan and get credit towards forgiveness. Number five, the owner compensation limitation, that $20,833 that applies to owners, applies cumulatively across all the businesses that have a PPP loan. So if there's 3 or 4 businesses owned by the same person, you get one $20,833 limit. You can elect to apply it any way you want across those multiple businesses, but it is just one limit. It's not $20,833 for each business, which was a rule that surprised some of us. So number 6, health insurance costs for your 2% or more shareholders in an S corporation is not included in the forgiveness amount. It's included in that W-2 compensation. So whatever's on the W-2 is what you get credit for, capped at that $20,833. That also includes family members that are employed by the company. This is the only place where we know that there is an attribution rule so far that would bring family members in to some sort of owner compensation limitation. This only applies for their health insurance. We think if they're employed by the company, they're not subject to the lesser owner compensation limit. It's the larger $46,154 as a non-owner. But for health insurance, it's going to be included in their W-2 compensation, and therefore it's not a separately stated item on the loan forgiveness application. If you have less than 2% ownership in that S corporation, you can go ahead and include those health insurance costs as if you normally would without this rule. So number 7, owners' retirement plan contributions. This is another new limitation that applied under these FAQs, are going to be limited to 20.833% of their 2019 contribution amount. It's not the full amount that goes into the plan like it is for non-owners. It's limited to 20.833% of what you put in the plan in 2019, which matches up with the amount of loan that you're able to get credit for. So this kind of matches things apples to apples for the owners, but it is a limitation that we weren't expecting when we first saw these rules. So number 8, if you have a partnership, you actually have to make a payment out of that partnership to the partners in order to get credit for loan forgiveness. Unlike if you're a sole proprietor or independent contractor, Schedule C taxpayer, you get automatic forgiveness for that $20,833 amount. You don't have to pay anything out of the business, but partners do have to pay something out of the business. It's not simply based upon their K-1 income like it is for Schedule C taxpayers. If you have a lease or a mortgage in place prior to February 15th, and then that lease is renewed or that mortgage is refinanced, changes the terms, whatever terms those change to, you can go ahead and get credit towards forgiveness for those amounts, even though it's amended after that February 15th date, because it was in place prior to February 15th. It's okay, you can use whatever it was amended to. Transportation, as a utility, they gave us a definition of that. They defined it as the cost of transporting the utilities. It's not the cost for the Uber driver driving you to your business meetings. It's not the cost of that flight that you might have taken cross country. That's not the transportation they were talking about when they looked at utilities. And then number 11, they gave us a nice FAQ that said that benefits, the health insurance retirement plan contributions, those aren't taken into account when we're looking at that salary wage calculation to see if we reduce anyone's salary by more than 25%. We're only looking at salaries and wages. We're not taking into account the benefits. That's pretty clear. The one question that's still outstanding on this is, how are tips treated for this calculation? Are tips something different than salary and wages, or are they included in this calculation? And Kevin, I don't know, or Alan, do you have any thoughts on that issue, or just kind of an unanswered question at this point in time?
Kevin?
Yeah, I think that tips are part of a person's salary or wage, just because of how they're reported. And also, Brandon, because the borrower was able to borrow money based on tips that their employees earned, even if the tips weren't paid by the borrower, by the business. So I would think that you'd still need to include that in the calculation for the 25% reduction penalty, if you will.
So Kevin, I know you like to be caught on the spot, so let me catch you here. What did you like most and least about the FAQs?
Oh, that's actually a good question. Well, I think they clarified the compensation caps. I think we're pretty clear on those now. They clarified that an S corporation shareholder owner employee is most likely somebody who owns 2% or more. I think that's what they were trying to accomplish all along. I think they cleaned up a couple unknowns. They left a few still open, unfortunately. But one was that there was some confusion with the Fte reduction exceptions, because if you look at the PPP Schedule A worksheets that contain Table 1 and Table 2, Table 1 was for employees that made under $100,000 a year generally, or new employees in 2020. And Table 2 was for employees whose salary was over $100,000 per year, because their compensation could be limited. But in Table 2, there was no add back for the Fte reduction exceptions for those employees. So there was some confusion on the part of some of the borrowers as to whether or not they could take advantage of some of these Fte reduction exceptions for those employees. And the FAQ clarified it and said, yes, you can. You just include that number in Table 1, even if it applied to an employee in Table 2. So that was, I think it was just a drafting error on their part with respect to the Table 2, but I think it caused some confusion, and the FAQ answered that. I think the most concerning thing in the FAQs, it makes sense, but it's still concerning, is the fact that if you're a seasonal employer and you got your loan based on your seasonal payroll, and it only applies if you got your loan based on your seasonal payroll, that's that 12-week period that you got to choose during 2019 to calculate your highest payroll cost. You now have to use that same period for your FTE calculations as your only reference period you can use. So I think that's going to take some people by surprise, because they've been relying on the FTE calculations for those other reference periods, and they can't any longer. So a lot of those seasonal employers were also greatly affected by the shutdown, and so they might still meet the qualifications to file the EZ form if they've got to file for loan forgiveness. So it might not affect them, but I've already talked to 2 borrowers Thursday and Friday that are going to be affected by that new FAQ.
Okay, very good. So Kevin, have I ever asked you a question you didn't like? Because you said that's not such a bad question.
Oh, you've asked me a few, Alan.
All right, now red means that this hasn't happened yet. This is not the law of the land yet, but I'm willing to bet Brandon's next paycheck that this is going to pass exactly as written. It has bipartisan support, and there's really no reason to change it. It is borrower friendly with an election coming up. But I'll say, though, going back to page 15, this is not borrower friendly. These FAQs were the least, usually the SBA comes out and goes, give it away, give it away, give it away. These were not giveaways by any means. But now going to the Rubio Collins Act, the most important thing is that borrowers who have a 50% or more reduction in gross receipts are going to get a second bite at the apple for up to $2 million as to these loans. So that's going to be a significant benefit. Number two, businesses owned 20% or more by Chinese entities. Now, these are not Chinese people. These are not people from China, but entities owned or controlled by the Chinese government or Hong Kong are not able to get the loans. Iran, North Korea, Russia, I guess that's okay. They singled out the Chinese. Number three, borrowers can request an increased loan amount if there was a mistake or SBA rules changed after you got the loan. So there will be some borrowers that'll go back for a second small bite, even if they did not have the capped gross receipts. That's going to keep CPAs and bankers pretty busy, I think. Number four, banks don't have to do anything. If the bank doesn't know there's fraud and they get the application for forgiveness and it looks like the borrower signed it, all they have to do is turn it in to the SBA. Now, banks may still have liability if they make a mistake telling a borrower how to fill the form out, or if they knowingly conspire with a borrower, but otherwise the banks get their hands completely washed here, and they get a new 3% on any new loans that they give on under the second bite of the apple, even though it'll be a lot less work for them because it'll be pretty much the same loan again. Number five, and this is where Kevin and I, discuss, we're not sure exactly what this means, but what it may mean is that if your loan was under $150,000, you don't have to do all the math. You just sign an attestation that said you made a good faith effort to comply with the rules. Sorry, you couldn't comply with them exactly, but you made a good faith effort. Bye-bye, $150,000. But if you borrowed $151,000 or you got exactly $150,000, then you've got to apply. You've got to comply with it, with at least all of the rules. Number six, if you borrowed less than $2 million, you do not have to provide your documentation to your banker or to the SBA, but you still have to say you have it. So we know what that means as skilled professionals. It means that a lot of our clients are never going to gather the documentation. Then they're going to be audited. Then they're going to be stepping in the brown stuff. So if you're a professional, you need to urge your clients to get the documentation together. Murphy's Law does often apply. Number seven, borrowers will be able to choose the end date of their covered period, which means you're not stuck with 8 weeks if you borrowed a certain time. You're not stuck with 24 weeks, and you could maybe spend enough money by week 12, but then wait until week 14 when you have fully staffed up to file your application so you don't lose your forgiveness. So that's going to be an important new flexibility. That's going to save a lot of different borrowers from problems that they would have had. Number eight, there is now an expanded list of the forgivable expenses. you still have to spend 60% or more of your loan on payroll expenses, federal payroll taxes, retirement plan expense, group health insurance expense. But as to the other 40%, if you want full forgiveness, it's not only rent and interest and utilities, there's now new expenses having to do with cloud computing, property damages from riots, personal protection equipment, and other things that a lot of people can spend money on. So that's good news for certain businesses. Number 9, community organizations, 501c6, chambers of commerce and business leagues are now able to get these loans for the first time when this passes. And number 10, if you are in a low income census tract, and we've got the link here, you just click on it and you find out if your tract that you're in has an 80% or less of average compensation median income, then if you also suffered the 50% reduction in gross receipts, you can borrow a heck of a lot more than 20.833% of last year's payroll. You could borrow there. This will really help a lot of businesses. And it's interesting, Brandon and I are in a fairly nice building, but our tract is at 82% because I didn't even realize that there's a low income apartment near our office we didn't even know about, but that brought our tract income down. So this is not the same tracts as the economic recovery zones. This is more of the real deal because it's current, but that's going to be a new interesting program, almost $100 billion allocated to it. So that's going to help a lot of people. Now, page 17 is a chart, and what it says is at the top is if you were open all of 2019 and you want to see if you can pass this 50% loss of revenues test, you can compare your first quarter of 2019 to your first quarter of 2020, or your second quarter of 2019 to your second quarter of 2020. If you have more than 50% reduction in revenues, either place, then you meet the test. And then I'm not going to go through the rest of the chart, but I think it's self-explanatory as to what happens if you were not open in 2019 or for part of 2019. So Kevin, my next question, which you may or may not like, is what does gross revenues mean? We have so many clients, their sales are down by more than 50%, but they're still collecting those accounts receivable from before the virus, and they don't quite meet 50%. What do you think what does gross revenues mean?
Well, gross revenue does mean whatever your revenue is based on your accounting method that you use. So that's a good point. If you are using cash basis, which a lot of small businesses do, then their revenue might not be down by 50% or more, particularly for the first quarter of 2020. None of this really hit us until March, but the second quarter might be the quarter that would trigger such a drop. We'll have to see if they get some additional regulations or guidance on that, because it really should be based on your sales, which is different than what your revenue might be if you're a cash basis taxpayer. So we'll just have to wait and see, Alan.
Does everyone who files a tax return know whether they're cash basis or accrual basis, or people who have never filed financial statements? Is it too late for them to go ahead and start preparing them a couple of years in arrears to be accrual method?
Again, I think we'll just have to see what they recommend, but or what they regulate it to be. But I think that if you should know what your basis of accounting is. It's on your tax return. You have to check a box. A lot of people don't know what theirs is. That's a good point. But I think that they equate sales to revenue in this particular example or situation. But again, we'll just have to kind of wait and see how that comes out. Alan, I've also been asked by a lot of people, will my revenue include such things as state support that may have gotten, or we know a lot of healthcare providers have gotten these special payments from HHS. And if you provide you provide care to Medicaid or Medicare patients, so those bonuses, if you will, or those additional amounts that those physicians got, that might be considered revenue as well, and maybe they wouldn't meet the test because of that. So we're going to have to see exactly how they define revenue.
Okay, very good. So I want to mention independent contractors now, then we're going to talk about EIDL, and then it's time for breakfast. So for independent contractors, sole proprietors, also known as Schedule C business owners, you filled out a Schedule C on your Form 1040. You were supposed to fill out your 2019 estimated Schedule C, and then your loan amount was going to be 20.833% of your line 31 net income, according to regulations that came out after a lot of independent contractors borrowed that plus their health insurance and their retirement plan amounts. So the early birds got to borrow more than the later birds. And now the forgiveness for these folks, these people, is the same 20.833% of line 31. So if you borrowed 20.833% of line 31 and you are still able to sign a forgiveness application, you're done. You file an easy forgiveness application. As long as you didn't cheat the government, you're good. Now, if you did borrow for the retirement plan and for some health insurance back before the regs said you couldn't, then you're going to have to look for rent, utilities, and interesting, your regulations say that you can write off gasoline and transportation because they got it wrong. They got confused on their own regulation. So if you're a Schedule C, get that forgiveness application filed right away if you need the transportation expense and the gasoline expense before they fix that error. We think it's an error. So that's where you are if you're an independent contractor, sole proprietor. If you get the second bite at the apple, will you get the same forgiveness again? And that's a big unanswered question that is not clear in the Rubio bill. If I get that second bite, do I restart a new 8 weeks, 24 weeks? Do I automatically get forgiven if I'm an independent contractor? Does the whole game and spreadsheet start again? And the answer is we don't know, because when they wrote this law, they didn't even, I think about it. They were too busy thinking about everything else. So put that gasoline in your tank. And now we go to EIDL. Brandon, do you want to cover EIDL? We have about 4 minutes, which I guess is about 3/10 of a billable hour. So go for it.
Yeah, so the EIDL loan, you're only eligible if you had this substantial economic injury. So that's an important standard that's defined in some past regulations. And what the regulations say, and we have the copy of the exact language here, is that you have to be a business concern that's unable to meet its obligations as they mature or pay its ordinary and necessary operating expenses. And then additionally, a loss in profits or a drop in sales is not considered a substantial economic injury for this purpose. So you have to be a business that's in pretty bad shape. Expenses that exceed your revenues is really the test that they're looking at for substantial economic injury. So a lot of people got this loan and maybe didn't necessarily qualify. And as Alan mentioned, the question is, should you consider returning it? And then if you are eligible, there's even more issues. So this SBA PowerPoint here lists the ineligible uses of the loan: dividends or bonuses, disbursements to owners, repayment of stockholder loans, expansion of facilities or acquisition of fixed assets. You can't refinance debt or repair or replace physical damages. So there's a lot of restrictions, and the main one, even though you can't use the loan for disbursements to owners, it says you can't use any of the assets of the business for disbursements to owners. You can't give any preferential treatment to anyone, make a gift bonus to an owner or a partner or even an employee. So you can't even pay a bonus to the employees while this loan is outstanding. So there's a lot of restrictions here. They're all in the loan application, which we have here on the slides. There's collateral requirements that apply if you got a loan greater than $25,000. There's restrictions that you can't transfer or sell any of this collateral without approval from the SBA. So a lot of people should be reconsidering whether or not they want to keep this loan and have these restrictions apply for the full 30-year term.
And think about the ability of your client to file bankruptcy and bankrupt out the SBA if they've taken this loan and then they've done the normal stuff that they've typically done. They've given bonuses to employees, they've given bonuses to themselves, they've taken distributions out of S corporations to avoid employment taxes. Then they go to bankrupt this out. Is the trustee in bankruptcy, is the SBA going to say, sorry, Charlie, you can't bankrupt this out. You broke the rules of a federal program? And I don't know the answer to that. We've looked for bankruptcy court cases to see how SBA borrowers have been slapped when they've broken these rules. There's very little, if any, case law on it. There's a lot of case law on dishonesty. Don't be dishonest if you don't want to go to jail. That's clear. But otherwise, the SBA, these EIDL rules are problematic. And as Kevin has pointed out, they also break the covenants of the bank loans that are in place. You know, you're not supposed to borrow money and give the federal government a lien on your assets without asking your lender. So what are the lenders going to do when the thaw freezes? They're going to say, repay that EIDL loan immediately. And the borrower is going to say, oops, sorry, I don't have enough money to pay it. And then the bank's going to say, okay, we're calling your loan. And there's going to be a big line at the bankruptcy court. So Kevin, what are your thoughts? I think we're at about 32, 33 minutes here. Do you want to just tell the folks what pages 66 and 67 are? We do recommend that you print these and laminate them and then take them into the hot tub with you. Maybe have a drink and read these very carefully. If you have a waterproof speaker, you can replay this webinar over and over again during that process.
Yeah, and these 2 pages here are just a really good quick reference guide for all the limitations that apply. Everybody needs to keep in mind that you have to look first at what your entity is, if you're self-employed, or if you're a C corporation, S corporation, or a general partnership, because each one of them has a different limitation and different items that can be included in your payroll costs. So that's what these 2 charts generally summarize. And these are, by the way, integrated into the PPP Excel worksheet that we've got. So it's you don't even have to laminate them. They stay there and are a quick reference guide there, and we update them as needed.
So Kevin, you've done really an amazing job on this spreadsheet. You have spent untold hours and you're helping thousands of borrowers, certainly hundreds of CPA firms. We know that with your spreadsheet. Tell us a little bit about your weekly spreadsheet tune-up talk, which is free, and I think it's quite interesting. Tell us a little bit about it, and tell us what kind of time you're spending updating this spreadsheet.
Yeah, we do a weekly tune-up, which really started as a summary of the different questions that I was getting from people on a weekly basis. And each week it changes depending on what's going on. This week we did the FAQs. So it's good. It's every Friday. We tape it on Thursday. It's 30 minutes. You can replay it later. So it's a good, actually good quick reference guide, in my opinion, to keep. The worksheet, Alan, we've not spent a lot of time updating it in the last month or so because we haven't had a lot of guidance that changed the format or any of the limitations. And actually with this August 4th FAQs, the only real change is that the seasonal employers don't have the choice of reference period any longer. That's the biggest change. The compensation limitations that the FAQs kind of clarified, we kind of already had that worked into the guidance in the spreadsheet already because we were kind of assuming some of those things were going to be the case. So really nothing different there as well. But like we've discussed before, we do an update every time there is a major update or a change and republish it. And anybody who's bought it before can get the updates for free.
So if anybody's interested in watching the spreadsheet program, that's free. The spreadsheet is not so free, but it's really, I think Kevin's probably getting maybe 12 cents an hour in profit from the spreadsheet. But you've got our email addresses here. If there's anything we can do, if you have any questions, if you put spreadsheet in the RE line, you'll get the links to go watch the free spreadsheet presentation and the invites to go to the free spreadsheeting event every Friday. You can make friends. If you're single, you might meet somebody else there. You've got our email addresses. If you have questions, as we always say, please send the easy ones to me and the hard ones to Brandon and Kevin. Thanks so much. We hope the rest of your Saturday is a great, great Saturday. Brandon, Kevin, any last words?
No, thank you very much.
All right. We hope that this helps you to help others. Thank you.